Welcome everyone to HueFin News. Today is March 18, 2019, the home of the 2-minute price prediction, as well as giving you all the news according to the charts. We're going to talk about the S&P 500 and how Credit Suisse has in fact raised its 2019 forecast for this particular index, up 20% gain for 2019. This is what they're seeing, right? And this is one of the positive things of understanding how to read price charts without causing any confusion, because they do all of the legwork, right? They do all of the research. They get deep down into the weeds, and all we have to do is literally pay attention to the price chart to see where they are placing their bets. And that's what we're going to do today. So before I get started in that, make sure if this is your first time coming to this particular channel, make sure that you subscribe. If you do like this video content, make sure that you go ahead and like and share, because we are the only organization giving you all the news according to the charts, and as well making sure that the information that we run across, if it is in fact being seen on the price chart. So let's go ahead and get started right now. This was an article posted on CNBC's website about 3 hours ago, and you can see in the title that this particular institution, Credit Suisse, raises its S&P 500 forecast. We're going to go ahead and look through this article real quick, and then we're going to look at the price chart to see if we are in fact seeing the same thing being seen. Now, some of the key points. Credit Suisse raised its year-end forecast for the S&P 500 to 3,025 from its previous estimate of 2,925 points. That is an increase of 100 points. Now, the bank's chief U.S. equity strategist, Jonathan Golub, said the receding risk will drive the market higher. Less hawkish comments from the Fed, declining inflation and recession fears, and the potential for a resolution to China trade issues are the primary forces driving volatility and spreads lower and stocks higher. This is what Jonathan Golub said. So now, underneath the stock market's epic rebound has been a more favorable, in quotations, favorable trend that Credit Suisse says will drive the market higher. And this is where they went ahead and increased their estimate of how high the S&P 500 will go by 100 points. That is a gain of more than 20% for the full year 2019, more than 7% from where we're trading right now today in this space. It will be the best year since 2013 for the stock market. This is the reason, because most of the market risk, according to this particular institution, has literally been receding. More favorable risk backdrop, the decelerating economic and earnings growth have been particularly inspiring for the market. And then specifically, less hawkish comments from the Fed, declining inflation and recession fears, and the potential for a resolution to China trade issues are the primary forces driving volatility and spreads lower and stocks higher. Now, just because we may see a mellowing out of the market's situations that can cause more volatility and even a decrease in lower prices, there is still risk. So even though Jonathan is seeing pretty good a dwindling of the market fears going away for 2019, you always want to have a standpoint, a probability that the risks have not been eliminated. Okay, it's still there. That's why they're only increasing their previous forecast by 100 points. Okay, that's not a lot considering the risk aspect of some of the recession fears, inflation, Jerome Powell raising interest rates, and even the trade war. Okay, so even though they're forecasting higher prices, keep in mind that the risk has not been completely eliminated. So many have credited the massive sell-off to the fears of a too aggressive Federal Reserve and a possible recession. Now, with the central bank signaling a patient approach to tightening and better than expected economic data, the rally may have more room to run. Not much, only by 100 points. All right. Credit Suisse actually lowered its 2019 earnings estimates for the S&P 500 firms to $170 from $174, despite raising its stock price outlook. The firm says the lower estimates are due to lower oil prices and large tech companies' worsening outlooks. Okay, so it's kind of two-sided coin. One instance, they're raising their estimates, and then the next one, they're lowering it. And that gives you the ability to do the same thing too. The market volatility allows that to happen. You're able to change your estimates and your previous forecasts. With the Fed on hold and trade deal in sight, that should be enough to lift the market despite the weaker earnings outlook. That has yet to be determined. And once we actually see this trade deal come to fruition, it might already be priced into the market. So don't become complacent and expect the market to just shoot higher due to a trade deal. Okay, so let's keep that in mind too as we continue to look forward to the year 2019. So I will have a link of this article in the description of this video, just in case you all want to read it a little bit further, get a little bit more in depth. But as always, the simplicity is on the price charts. They've done all the legwork. They give us all the statistics as to what the market for the S&P 500 has been doing. And all we got to do is look here at the price chart to see exactly if that's coming to pass on what their research has brought to them. So now let's go ahead and look at the price chart for the S&P 500. You can see it is up minor today, 0.02%, not by much. But looking here on the monthly price chart for the S&P 500, now this will go for the NASDAQ and the Dow as well. But currently they're only seeing the S&P 500 shooting higher. And right now they're on point. The price chart is reflecting on a long-term basis that this particular index has some room to continue to move higher. Now they're looking for 3,000 points, 3,025 right here. So the market will have to make all-time highs in S&P 500 in order for that to do that. Right now, we're still expecting the S&P 500 to continue to move higher. We don't see a lot of weakness coming to the market right now, but we're approaching it relatively soon. I would say maybe around 28.75 all the way up here to the tops of these monthly bars from September and October of last year will be where we should see some more sellers coming to the market. Now, if we break above this 29.37 or the high of 29.40, then yes, the strength is still being maintained. I will be expecting the S&P 500 to continue to move higher too. The current move in the S&P 500 is one of higher prices. The strength is here. We will be looking for it to move to the upside. And again, the resistance area will be around 28.75 all the way up there to 29.25, well, 29.40. Okay. So currently we're still anticipating this market to continue to move higher. The first resistance area will be 28.75, but as we go throughout the rest of 2019, definitely the S&P 500 can make all-time highs. There's no weakness being seen as of this particular moment in this particular index. Okay, so the price chart for the S&P 500 on the daily time frame, as well as on the weekly time frame and on the monthly time frame, are all insinuating continued strength and movement higher in the S&P 500. So it is actually correlating with what Credit Suisse or Jonathan Golub is trying to insinuate, that it has room to run. Now, will it go to 3,025? That has yet to be determined, but the current market direction is one of higher prices, and we will be expecting the S&P 500 to continue to move higher. There you go. We have actually substantiated what has been seen on this article, and it is being seen on the price chart as well. So they are both in agreement that the S&P 500 still has some movement to the upside to go through, and that is what we're going to forecast as well. Give us your thoughts, give us your opinion about the S&P 500. Do you see this particular index continue to move higher in price? If so, leave us a comment in the comment section on this video. As a matter of fact, go ahead and check out our HueFinancial.com website. That is where we place most of our news articles pertaining to the price charts there. And you all will have continual access to that too. If you'd like to have more information though, that is not available anywhere else, you go to our website as well. You can sign up, become one of our clients to where you would be the only one getting the access of what we see going on for most of the other instruments that is available in the financial markets. The link is going to be in the description of the video. So if you're interested, go ahead and click on it. Go to our website. You can sign up there. Make sure y'all maintain your profitability, and I will see you all later.